Hello and welcome to Macro Sutra, our new show on the economy, business, and policy with Radhika Pandey, economist and a senior fellow at the National Institute of Public Finance and Policy. Earlier this week, the National Statistics Office released GDP numbers. GDP numbers for the full year 2021-22 and also for the last quarter of that financial year, that is the January to March quarter. There were some surprises and some numbers that were expected. We are going through a tough economic situation because of the post-pandemic recovery that's taking time, and also the Ukraine war that has created massive headwinds and led to very sticky inflation. So what did the numbers say? That has been quite fairly analyzed over the last few days, but we will quickly talk to Radhika about what was the good news in the GDP data and what was the not so good news. So first, what was the good news in the GDP data, Radhika?
Yeah, so if we look at the annual numbers specifically, the 2021-22 numbers, we see that we have recovered from the pandemic lows. So annual numbers were very significant because we wanted to see whether we have recovered from the pandemic hit shock that that affected the economy in 2020. So we see that the GDP has recovered. All the sectors barring the trade, hotel, transport, the contact intensive sectors, we see that the GDP has recovered in most of the sectors. The other good news is that the construction sector has performed exceptionally well. So if we look at the advance estimates that were released in the month of February, that were based on 9 months of data, and now we have the provisional estimates that are more reliable estimates of GDP. We see that the construction sector has performed better than what was anticipated by the CSO. So, and also agriculture. Agriculture has, there has been a moderate decline, but agriculture has, performed well in 2021-22 also. So that's the good news in the annual numbers.
And the not so good news comes in the quarterly numbers?
Yes, the not so good news comes in the quarterly numbers because quarterly numbers reflect the impact of the Omicron hit restrictions as well as the war. So January was the month when there were restrictions were reimposed due to the Omicron wave, and then from 24th February we start seeing the impact of war on data. So that is where we've seen that the GDP quarterly has moderated from the last quarter, and the main key cause of concern has been the manufacturing sector, where we've seen a contraction. So that's really a cause of concern, and that shows the direct impact of the war. Because of the supply side bottlenecks and increase in input cost pressures, we see that the manufacturing sector has contracted. And on the spending side, if we look at the expenditure side, where we talk about consumption, investment, government spending, there we have a good news as well as bad news. The good news is that investment has recovered. GFCF, gross fixed capital formation, has performed well, both in terms of growth as well as in terms of share in GDP. Whereas consumption has suffered, again, understandably due to inflation. Because of inflation, there was a cut in discretionary spending, so that is getting reflected in consumption.
So Radhika, there was a recovery that was happening after the pandemic. And now this first quarter war and imported inflation has hurt a lot of countries, including India. So would it be correct to say that the pace of recovery has been slightly affected by what has happened in the first quarter?
Yes, so if we see the Jan-March quarter, the pace of recovery has moderated, and going forward we will see that one factor, which is the COVID hit restrictions, might dissipate. The restrictions or the moderation in growth on account of COVID restrictions might be lesser, but on war we are still not certain because it's still unfolding. So so long as there is escalation due to war, we will see that the pace of recovery getting impacted. mainly due to inflation. And if we look at the IMF numbers and the other agencies forecasting growth, we have seen that they have moderated their growth projection, particularly after the war.
So the word that is now going around in economist circles and in policymaker circles, not only in India in around the world, is this word called stagflation. And there are warnings internationally about lots of countries probably going into recession or stagflation. First of all, for the benefit of our viewers, can you explain what exactly is stagflation and how does it affect us?
Sure. So stagflation is a combination of two words, stagnation and inflation. So whenever we have inflation at a time when the economic growth is still weak or it is still not recovered, we see a situation of stagflation. Or in other words, if we talk about inflation during a slowdown, that leads to a kind of stagflation in the economy. And that is what we are seeing in some of the advanced economies, particularly. These concerns have become quite real in advanced economies because their inflation has risen to record levels. Like if you see US, it has risen to 8.3%. But if we look at their GDP numbers, their GDP contracted for January to March quarter. So now there's a very complex conflict, a trade-off between whether to manage inflation through aggressive policy rate hikes. So when central banks raise the rates, that will impact consumption
because liquidity is reduced.
Liquidity is reduced, the cost of borrowing increases, it influences demand, so demand gets suppressed, so economic growth slows down. So that is what is now a cause of concern, because till now the consensus was that globally central banks will go in for aggressive rate hikes. But now there is a rethink. How much of rate hikes? What should be the pace of interest rate hikes given that economic growth is slowing? And a host of indicators, particularly in the US, EU, are pointing to a pronounced slowdown.
In fact, I was just looking at the IMF numbers for the April World Economic Outlook, which is there in your column today, which we will be putting on the notes of the show after this. The link will be there for you to read. The IMF April World Economic Outlook has sharply cut its projection for global growth to 3.6% in 2022 from 6.1% in 2021. So what does stagflation do to countries, to an economy? For let's say, suppose there is stagflation in India, what does it do to us?
So stagflation means that economy is facing a dual problem. It is facing higher prices on the one hand, and on the other hand it is facing economic slowdown. So that's a double whammy for consumers, because it's a double whammy for investors, because on the one side demand for their product is low, on the other side input cost pressures are rising, inflation is rising. So it is bad for all stakeholders or all segments of the economy, and it is difficult for policymakers. It's difficult for the RBI and the central government to decide on what should be the policy priority. Should they focus on growth or should they focus on inflation? How do they balance these conflicting objectives? Because as we discussed, if they only focus on inflation, then, and if they go on increasing interest rates, that will hamper the consumer demand, that will dampen consumer demand and further aggravate economic slowdown.
So that is the question we have asked today. Does India face that risk right now, Radhika? Because Chief Economic Advisor Anantha Nageswaran said on the day the data came out that the risk for India is low, but he did not say there is no risk. Correct. What is your assessment?
Yeah, so basically, how do we assess whether there are stagflation risks or not? Because the GDP number is for the January to March quarter, and that's a lagged indicator. Now we are in the month of June. So how do we assess? So we look at the high frequency indicators, we look at what's happening to the various indicators that signify economic activity, we look at GST collections, we look at some high frequency indicators that show manufacturing sector activity, services sector activity. So if we look at these host of variables, we see that as of now, we do not face the risk of stagflation. While inflation is a problem, but economic growth is still going sound, because if you look at GST collections, though they have moderated from April, but still they are going strong, 1.41 trillion GST collection. If we look at manufacturing PMI, which is a very high frequency indicator to assess manufacturing activity, it's a survey of manufacturers. We see that it's done well. And if we look at the the composition, the drivers of this PMI manufacturing, we see that it's driven by exports. So exports for India are still going strong. So while there are input cost pressures, there are adverse implications of inflation. Right now, economic activity wise, we are doing well. If you look at the core sector that came out at the same time the GDP numbers came out, that also shows that we are, the economic activity also is sound. The other factor is, if you look at alongside the GDP, the fiscal deficit numbers also came out. And we did better than the revised estimates. So 6.9% was the fiscal deficit revised estimate, but the actual is 6.7. So it gives the government headroom to address the economic slowdown related concerns through interventions.
But 2022, like we discussed, as in 22-23, the financial year still has headwinds. I mean, which is also something you talk about, war-related disruptions. So it's a monetary fiscal balance that has to go on through the year.
Yes, so monetary fiscal balance has to go on. The RBI has to decide based on the incoming data as to how much interest rate hikes are needed. While they have already made it clear that in June they are going to raise interest rates. But after that, what happens during the second half of the current financial year? What will be the interest rate hikes? That will depend on the trajectory of global crude oil prices, edible oils, commodity prices, energy prices, and so on. So, and at the same time, the government has to decide on whether they want to give more duty cuts, subsidy support or not, depending on their fiscal balances. So as I mentioned, it's a balance between a lot of things. It's a balance between managing your fiscal situation, monetary, and your current account deficit, because that's also increasing. So it has to be a continuing challenge depending on the incoming data.
Although I think this morning there was some data coming on CAD numbers. There was a bit of a worry in the CAD numbers.
Yes. So CAD has increased because our imports have risen much more than our exports. And that is again due to rise in crude oil prices. So those are the concerns going forward.
Let's take some questions, Radhika. We have viewers sending in questions. Thank you so much to all our viewers who are watching us and sending us questions. The first one is from Bulbul. I think we've answered it, but we'll anyway mention the question. What do you think of fiscal deficit numbers broadly and also compared to last year?
Yeah, so fiscal deficit number that came out show that we did better than what the revised estimates showed. And here again, very interesting element is being played out by inflation. Because of inflation, our nominal GDP has increased, and therefore the denominator, fiscal deficit is always expressed as a percentage to GDP. So if your GDP, your nominal GDP has increased due to inflation, your fiscal deficit gets smaller, the ratio gets smaller, and therefore the government has more headroom. So we have done better, and going forward also the government has indicated that this, what they call interestingly as the denominator effect, because your GDP is playing a big role in what is the fiscal space. So it will play a role going forward also in the coming financial year.
But that is one of the arguments some people also make, Radhika, for GST numbers going up. Because inflation is high, your GST receipts are also high.
Absolutely. That's true. Anything which is expressed in nominal term is showing the combined impact of volume as well as inflation. And it's very hard to disentangle the two impacts.
Pragya has a question. She asks, what has surprised you the most in these numbers? I think she's referring to GDP numbers. So what has surprised you most?
Yeah, the most surprising element is of the manufacturing sector contraction, because if you look at the corporate sector results, the listed companies' performance, they have done quite well. So, manufacturing sector, how they assess the GVA, gross value added,
Yeah.
they look at two things. They look at the IIP and they look at the performance of the listed corporate sector, the manufacturing sector. And if you look at that aspect, the listed companies' performance has been quite robust. In January March quarter also, the profits have been in double digits, sales growth has been good. So it again shows that there is a kind of a dichotomy between IIP and your listed companies' performance. So that was a bit of a shocker. Why manufacturing turned negative, it contracted, and it's not just a surprise, it's a cause of concern also going forward.
Anant asks, will these numbers give confidence to investors? I don't know if he's talking about investors in equity markets or investors who invest in India, foreign investors. So does it give confidence?
Yes, so if you look at the quarterly numbers, there was expectation that the growth will slow down. So the numbers are very much in line with expectation. So it's not that the numbers are way off the expectation. There was expectation that due to the Omicron impact and the war, the growth recovery will slow down. Now, if we look at foreign investors, they weigh India not as a standalone entity. They always weigh India as is in relation to other economies. They weigh India in relation to what's happening in US and other countries. So it all depends on a confluence of a number of factors. It depends on what they are going to do about their interest rates, what we are going to do about our interest rates, debt, equity, valuation, a number of factors.
Yeah. Many variables.
Many variables, yes.
Aman has just a question about what would you call this? Would you call this growth, or would you just only call it a decent recovery? What would you call it?
It is a growth, but it's a slowdown in growth.
Slowdown in growth.
Yes, yeah.
So, yeah,
it is still a positive growth. It's not like the US where we saw a contraction. There was a growth, but the pace of growth has slowed down in the Jan-March quarter.
Tanish has a question, Radhika, and he's focusing on the role of startups in this recovery. Have startups contributed? If startups have contributed, then what happened to those startups who were suppressed during the pandemic? Do we have any information about this?
We can always talk about these based on their what they are raising funds from the market. So in 2021 we saw a number of startups raising funds from the market. So that is one way in which we can assess the performance of startups, and some of the startups like Nykaa have done well, whereas others have not done well. So but 2021 was an year of IPOs and was a year where a lot of startups raised money, taking advantage of the liquidity and low interest rates prevailing in the 2021 period.
Raghu it's a bit of a rhetorical question, but I will anyway ask it. He's asking, would it be right to say the rich have become richer once again, poor have become poorer? How do you say that?
So, see, if you look at the GDP numbers, it's not, we cannot figure out based on the GDP numbers whether rich have become richer or poor have become poorer. But we can make all these assessments based on what's happening in the rural economy, what's happening to the rural sector demand, what's happening to the informal sector like MSMEs. And if we look at some of these indicators, this will not be a straightforward answer, but some progress towards this can be made if you look at some of the indicators of rural demand, and if we look at what's happening to farmers, that they were able to gain higher prices because of the rising prices of wheat. So those are some of the indicators through which we can assess the strength of rural, urban, or rich, poor.
We'll take one or two more last questions. Adi says, is India leading the continent? I'm guessing he's talking about the subcontinent in economic recovery, considering the problems being faced by countries such as Pakistan and Sri Lanka. But there is Bangladesh, which also does very well.
Yes, Bangladesh also does well. But overall, if we see based on the size, we see that India is reasonably doing better than other countries and also some of the advanced economies, because the nature of inflation still is primarily imported inflation, whereas if you look at some of the other countries, it's a combination of demand side because of the kind of stimulus that was provided during the pandemic time. So that way India is still, I mean, the fundamentals are still better than the other comparable countries.
And India is the fastest growing large economy. So we are growing faster than China. So why compare to Pakistan or Sri Lanka?
Yeah.
Omi is a new member. Hello, Omi. Welcome to The Print. Omi's question is about how diesel prices affect inflation. We talked about inflation, but inflation continues to be a number. There is stagflation. So, does diesel affect inflation disproportionately? Because diesel is used for logistics, trucks, and even trains to some extent, and industry. So, if you cut diesel prices, do you think it will help reduce inflation? Only diesel, nothing else.
See, diesel, you are right, diesel impacts inflation directly as well as indirectly. You know, one is that diesel has a weight in the CPI basket, and then diesel has second order effects. Diesel inflation has second order effects on transportation, logistics, truck rentals, and having an impact on vegetable prices. Diesel is a raw material in industry, so that also leads to higher inflation. So diesel has a significant impact. But what we see is that even if we exclude diesel, or what we say in economic parlance, core inflation, which is excluding the oil components and the food component, then also we see that inflation is picking up because there is a significant transmission from input cost pressures to product prices. And as we discussed last time, not only in goods but also in services, we are seeing inflation is rising. So even if it's not just diesel which is driving inflation, now it's the other factors are also picking up.
Last question, Radhika. This is about what is going to happen next week, which is what our next week's show will be. But Abhimanyu wants to know, what should we expect from the MPC meeting now?
So one is that they're going to raise interest rates.
No brainer, as the governor said.
No brainer. So, and what we do expect is that they will front load interest rate hikes during the first 2-3 meetings of this financial year. The other thing that we should keenly watch the monetary policy meeting is for the inflation projections, because the inflation projections were made in April, and in May there was just an off-cycle meeting where just the repo rate hike was announced. But so we should watch the MPC meeting for their projections about inflation, about economic growth, as well as what they do for interest rates.
Thank you so much, Radhika. We will be next week's Macro Sutra will be focused on the MPC meeting. The meeting is on Monday and Tuesday, so we will know by Tuesday, Wednesday what the MPC has decided. Although, like Governor Shaktikanta Das has said, it's a no-brainer. There will be a interest rate increase. The question is it 25 points or 50 points or something in between, like they tried 40 last time?
Yeah.
So we will be back next Friday, same time. Do tune in, and we will tell you everything that you would like to know about the monetary policy, rates, and RBI views, consumer confidence. So please do come back. Until then, stay safe and have a good weekend. Thank you for watching Macro Sutra at The Print.